Ever wondered what HODL or DeFi means in the world of cryptocurrency? Welcome to our in-depth guide to cryptocurrency terminologies. In the next few minutes, we'll be breaking down 60 of the most commonly used terms and abbreviations in this ever-evolving digital space. Cryptocurrency, in simplest terms, is a digital or virtual form of currency that uses cryptography for security. It's a decentralized form of exchange that has been gaining popularity since the creation of Bitcoin in 2009. As you delve deeper into this innovative world, you'll encounter various terminologies that may seem a bit confusing at first. But worry not. This guide is designed to help you understand these terms better. However, it's important to clarify that this video is not intended to provide investment advice. It's purely educational. By the end of this video, you'll be more familiar with these terminologies and hopefully feel more comfortable navigating the crypto space. We'll start with some of the more common terms you might have heard. First up is blockchain. This is a type of database that stores information in blocks that are chained together. It's the underlying technology that powers all cryptocurrencies. Next, we have Bitcoin. This is the first and most well-known cryptocurrency created by the pseudonymous individual or group of individuals known as Satoshi Nakamoto. Ethereum is another major cryptocurrency, but with a twist. It's not just a digital currency, but also a platform for creating and executing smart contracts and decentralized applications, or dApps. Now, altcoin is a term used to refer to any cryptocurrency that isn't Bitcoin. So, Ethereum, Litecoin, Ripple, these are all examples of altcoins. A wallet, in the crypto world, is a digital place where you store your cryptocurrencies. It's like your digital purse or pocket, where you keep your digital coins safe. Private key and public key are critical for your cryptocurrency transactions. Your private key is like your secret password. It's something only you should know, and it's used to sign your transactions. Your public key, on the other hand, is shared with others so they can send you cryptocurrencies. Mining is the process of validating and adding new transactions to the blockchain. Miners use powerful computers to solve complex mathematical problems, and in return, they get rewarded with new cryptocurrencies. A node is any computer that connects to the blockchain network. Nodes maintain and update the blockchain, and they validate and relay transactions. Finally, we have Satoshi. Named after the creator of Bitcoin, a Satoshi is the smallest unit of Bitcoin, equivalent to 100 millionth of a single Bitcoin. These are some of the basic terms you might come across in your crypto journey. Scene script. Next up, let's dive into some terms related to trading and the market. First off, we have bull market. Picture a raging bull, charging forward with unstoppable momentum. That's essentially what a bull market is, an upward trend where prices are expected to rise. If you hear someone say they're bullish, they believe the market will go up. On the flip side, we have bear market. This is when the market is in a downward trend and prices are falling. A bearish person expects prices to drop, like a bear swiping down with its paw. Now let's talk about FOMO. It stands for fear of missing out. This is when people buy into a cryptocurrency because they're worried they'll miss out on potential gains. It can sometimes lead to rash decisions, so be careful. FUD, or fear, uncertainty, and doubt, is the opposite. It's a strategy used to make investors uncertain and fearful, often leading them to sell their coins. Pump and dump is a manipulative scheme where a coin's price is artificially inflated or pumped, only to be sold off or dumped by those orchestrating the scheme. A whale is an investor with a lot of capital who can make big waves in the market with their trades. If you've been left holding on to coins that have drastically dropped in value, you're a bag holder. It's like being left holding the bag after a party, not a great position to be in. ETH and ATL stand for all-time high and all-time low. They refer to the highest and lowest prices a coin has reached. Finally, ROI stands for return on investment. It's the profit or loss made from an investment, expressed as a percentage of the initial investment. Understanding these terms can help you make sense of market trends and trading behaviors. Now that we've covered the basics, let's get into some more advanced terms. First up, we have smart contracts. These are self-executing contracts where the terms of the agreement are written into code. This means transactions can be made trustless, transparent, and without the need for a middleman. Next is decentralized finance, or DeFi for short. This is a term for financial services on blockchain that eliminate intermediaries. It's like banking, but you're in control, not the banks. NFTs, or non-fungible tokens, are unique digital assets that represent ownership of a particular item or piece of content. Unlike cryptocurrencies such as Bitcoin or Ethereum, NFTs aren't interchangeable for other tokens of the same type. Staking is a process where you lock up your cryptocurrency to secure a network and receive rewards. It's a key part of many proof-of-stake POS blockchain networks. Yield farming, also known as liquidity mining, is a way to earn rewards by providing capital to a DeFi protocol. It's a bit like putting your money in a savings account and earning interest, but with potentially higher returns and risk. A liquidity pool is a collection of funds locked in a smart contract. It's used to facilitate trading by providing liquidity, and users can earn fees by adding their assets to these pools. Now, let's talk about DAOs, or decentralized autonomous organizations. These are organizations ruled by smart contracts, and the decision-making process is automated and enforced digitally. Following DAO, we have dApp, short for decentralized application. These are applications that run on a P2P network of computers rather than a single computer. Gas is a term used in the Ethereum network to represent the computational effort required to execute operations. Just like you need fuel to drive your car, you need gas to perform activities on Ethereum. Lastly, we have sharding. It's a process that splits a blockchain's database into smaller pieces, or shards, each capable of processing its own transactions and smart contracts. These terms are more specific to certain aspects of cryptocurrency, like blockchain technology and decentralized finance. Crypto isn't all serious. There's plenty of humor and memes in the community too. First up, we have HODL. It's not a misspelling of hold, but a crypto term born from a Bitcoin forum post in 2013. The author, in a state of inebriation, ranted about holding his Bitcoin despite a market crash. He spelled hold as HODL, and the term stuck. Today, HODL means hold on for dear life, encouraging traders to resist selling their coins during market fluctuations. Next is mooning. This isn't about exposing your backside, but rather a term used when a cryptocurrency's price skyrockets to the moon. It's every crypto investor's dream to own a coin that's mooning. Then we have Wrecked. Borrowed from the gaming world, Wrecked is a shortened version of Wrecked. It's used when an investor loses a significant amount of money in a bad trade or market crash. Now, Lambo. This is short for Lamborghini, the luxury sports car. In the crypto world, it's a symbol of success. If someone asks when Lambo, they're asking when they'll make enough profit to buy one. A fudster is someone who spreads fear, uncertainty, and doubt about a coin or the market, often to manipulate prices. Shill is another term with negative connotations. It refers to someone who promotes a cryptocurrency for personal gain, often without disclosing their interest in it. To the moon is a phrase used by optimistic traders hoping for their coin's price to skyrocket. It's often coupled with a rocket ship emoji. When Lambo is a phrase that embodies the get-rich-quick mentality of some crypto traders. It's often used sarcastically to mock unrealistic expectations. Dior, or do your own research, is a wise piece of advice, reminding traders to make informed decisions rather than following the crowd. Lastly, a no-coiner is someone who doesn't own any cryptocurrency, often used derogatorily to describe people who missed out on the crypto boom. These slang terms and memes add a bit of fun to the crypto space, but they also have real meanings behind them. Well, that was quite a ride through the world of cryptocurrency terminologies, wasn't it? We embarked on this journey together, starting with the basic terms, moving on to trading and market terminologies, diving into the more advanced ones, and even having a bit of fun exploring crypto slang and memes. We've covered everything from blockchain and hash rate to HODL and moon. This broad spectrum of terms is crucial to navigate the often complex but exciting world of crypto. Understanding these terms not only helps you communicate effectively with others in the space, but also empowers you to make informed decisions. Let's not forget that the crypto landscape is ever evolving, with new terminologies popping up all the time. So keep your curiosity alive, continue to learn and explore, and stay updated with the latest trends and jargon. Congratulations on expanding your crypto vocabulary. Remember, knowledge is power in the world of cryptocurrency.